Stocks have failed to break above resistance. I'll show the specific levels. Dow theory. The indices must confirm each other, and I'm talking about the Dow Jones and the transportation indices. Gold is at records as dollar is being pressured. We'll also look at oil, as it is possible that it might break below a barrier and collapse, and Bitcoin still looks vulnerable. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, or Saturday already, March 22nd, 2025. Don't forget to make a comment, subscribe to this channel, share this video so more people can see this video and benefit from it. If you are a subscriber, stay tuned. We'll be looking at market breadths, various currencies, ETFs, large cap stocks, some of the speculative securities, as well as gold related. That is coming separately. We're currently looking at the S&P 500, and notice that so far we have failed to break above this blue support resistance line. So we have tried on at least 3 occasions. One is on the 17th of March, Monday, on the Wednesday, the 19th of March, as well as on Thursday, the 20th of March. And so far we have failed to break above this blue support resistance line. Now, what are these lines? You can find out more about them by going to my website, MasterChartsTrading.com. These are basically support resistance indicators that I programmed, and you can have them on your chart. They are available for TradingView.com. Now, as I just said, so far we have failed to break above resistance that is being provided by this blue support resistance line. It's not the end of the world. In fact, we have seen a very similar picture just, few months, about a year ago or so, a year and a half ago, whereas we saw a break below this blue support resistance line, for example, right here on the 20th of October 2023, and we tried to break above in the first attempt right there where I'm hovering at 24th of October, but we failed, and only broke above it on the second attempt, 2nd of November 2023. And yes, afterwards it was extremely successful. However, right now we have a somewhat different picture, whereas we have broken below this blue line, and so far we have failed to close above it on 3 different occasions. Everything can change Monday, and we can just break above it and continue higher. It's entirely possible. We can look at the same chart on the weekly time frame. So it just means weekly just means each candlestick, each one of those green and red funny looking squares and rectangles, they are 1 week's worth of activity. And we can zoom in on the latest price action, and there it is. So the breakdown began when we hit highs on the week of 18th of February, in mid-February, and basically we sold off for 3 weeks, and then we gapped down. So when we gap down on the way down, usually it's an indication of that we're approaching a bottom. And I was like pretty hopeful that yes, maybe we're gonna just stop falling, and we're attempting to do just that. We're attempting to stop falling. So once again, there is that same resistance. We can see it on the weekly chart just as well. We saw it on the daily chart. So we tried to go above this blue support resistance line, but so far failed to get above it. And we're just basically waiting to see if we're going to break above it. And if we do, then we will consider buying at that point. So that's S&P 500, probably the most important chart of the day. So let's look at a couple more ideas. So first of all, what is a Dow theory? So Dow theory, among other things, there's a trend, there is a theory that market discounts everything. Of course it does. the most important aspect above the Dow theory is this: indices must confirm each other. And which specific indices? Well, since Dow himself invented the indices back in early 1900s, I believe, we're looking at two indices: Dow Jones Industrial Average and the Dow Jones Transportation Average. So let's look at those two. So number one is Dow Jones Industrial Average, represented by ETF called DIA. You can also use the actual index, it doesn't really matter. So let's look at this Dow Jones Industrial Average on the weekly time frame. Okay, so this is Dow Jones, the actual index, and on this chart, the index tapped out, or I'm hovering on the 27 on January, week of the January 27, 2025, so a couple months ago. It looks pretty good. It looks like it correlates with S&P 500. S&P 500 topped out about the same time. So Dow Jones topped out in January of 2025 and then came under pressure as just the rest of the indices did the same thing. However, if we look at the transportation index, and this is represented by a exchange traded fund ETF with a ticker symbol IYT. So this is a transportation average, basically, our modern equivalent of what used to be called the transportation average, because back then they were basically railroads. Let me see, where is it? Yeah, railroads. Assumption is that the railroads need to be profiting for transportation of goods and goods. So transportation nowadays is different. Of course, we have the airlines as well, but it's pretty glaringly different from the Dow Jones. Whereas Dow Jones topped out and made a new record in January of 2025 this year, the transportation average made a record back in November of 2025 and has not made a new record since. In fact, it has been under pressure. It made a marginal new high right there in January, just like Dow Jones and S&P 500, but then it really collapsed. And notice again, notice another thing is that currently the Dow Jones transportation average actually is trading below the red line. So this is a caution. Okay, this is caution. And if we close below the yellow line, that is outright avoid. In other words, when the when the stock, specifically a stock or an ETF that holds stocks, closes below this yellow support resistance line, that means we need to avoid it, and it means it has entered a new bear market. Okay, so right now we can see that transportation topped out back in November, attempted to top, make a new high in January, completely unraveled, and actually is now in caution phase, approaching the avoid phase. So if I was, subscribing to the Dow theory, indices must confirm each other. Specifically, the Dow Jones needs to confirm the transportation and vice versa. Transportation needs to confirm Dow Jones. It is not happening. In fact, transportation is lagging badly, and in fact, it's really possible that it could enter a new bear market. So that is not a good sign, in my opinion, and we could see further downside for the various indices, such as Dow Jones, such as S&P 500, and Nasdaq, because of this, what I just described. So let's see what happens. But this is right now the situation that we're facing, is that transportation stocks somehow are perhaps warning us that not all is well, and we'll see if their warning needs to be heeded, or we're just it's a noise, basically. So let's again see what happens in a few days ahead. Looking currently at the dollar, this is DXY, dollar currency index, and the dollar has entered a new bear market. So when we trade currencies or things like gold and silver and oil, natural gas, we traded between these two lines, the blue line and the red line. In other words, when the security such as a forex product like euro, US dollar, for example, is above the blue line, it's in an uptrend. When it turns around and closes below the red line, it's in a downtrend. So right now we're looking at these two, only these two lines basically. So up till really relatively recently, dollar broke out back in October of last year, made a 2-year high, but then kind of stopped making new records. And I looked at this candle on the 3rd of February, and I'm like, this looks very toppy. Indeed, my prediction proved prescient, and we have made a close below this red support resistance line, which by extension means what I wrote here, new bear market for the dollar. So unless we see a quick rally and another close above the blue line in the next few weeks, I think we're going to expect new lows from the dollar. And what I'm reading right now from the analysis, for example, by Wall Street Journal, is that President Trump actually wants a weaker dollar. And so it actually makes sense what's going on. Yes, we are seeing a weaker dollar, lower lows and lower highs. If we, make a new lower low, I think we're almost guaranteed to retest this yellow support resistance line. So what does that mean in practical terms? Because we do trade gold, we can't really trade this dollar currency index. We can, if you have the Forex account, trade currency pairs, for example, euro versus US dollar or British pound versus US dollar. But we can indeed in the United States trade gold, and gold is traded in US dollars, so gold divided by US dollars. And I just showed you that the US dollar is getting smaller. It used to be big, but now it's getting smaller. So if we look at this currency pair, it's XAU divided by USD, so gold divided by US dollar. And like I just said, the US dollar is getting smaller, so gold by extension is getting bigger. That's why it's going to new records. So indeed, we just hit new records. This is an all-time high, over $3,000 per troy ounce. Is that crazy or what? On this chart, I have shown how to trade Forex products, in this case gold. It's pretty obvious. If it's not obvious, we buy on close above the blue line. When gold closes above the blue line, we buy it. When it pulls back towards the blue line, we buy it. So basically, we've been doing something of this nature, and the latest trade was just spectacular. It went from 2,000 to over 3,000. So gold is doing obviously quite well. It is in inflation hedge, albeit not as good as regular stocks. But yes, it is definitely a tradable security, and it can be used as an inflation hedge to a degree. So new all-time highs for gold. We can also look at a weekly chart and see what that looks like. So there's that weekly US dollar. There's the gigantic candle from the beginning of March, at that point it entered a new bear market. So right now, a dollar is possibly trying to bottom here, but like I just said, the dollar is in a downtrend, so we will be expecting new lower lows and lower highs. So perhaps we'll maybe move something of this nature, like it might move a little bit higher, but then we'll most likely make a new low. So we're looking at new lows into May, June of this year. By extension, gold will most likely benefit, but again, nothing moves in linear fashion in the markets, so we need to be aware of that. Here's gold on the weekly time frame. It looks even more spectacular than on daily. So again, same thing. We want to be buying on close above the blue line. You can find out more about these indicators, this green, blue, red, and yellow lines. You can find out more about them by going to the link in the description. and there is the run over 50% gain currently for the gold for gold. So yes, definitely overextended. Definitely a pullback is likely. However, we don't know at which point that will occur. So we might as well just ride this higher for now. Gold miners also, so this is GDX gold miners. Gold miners are also doing quite well. So I wanted to show you, for example, at what price levels I would have been buying gold miners. We were actually buying them as well, but I'm showing to you on the weekly time frame. So once again, so we make a higher high and then pull back towards the blue line, and then higher high, pull back towards the blue line, another higher high, yet another pullback towards the blue line. We buy on close above the blue line. Okay, and then another opportunity to buy just a few weeks ago in the beginning of February, and new multi-year high. This is a multi-year high. So we broke above 2020's highs. So we're basically breaking above. This is about 12-year, 13-year high we're seeing right now for gold miners, and an all-time high for gold itself. All right, we're currently looking at oil, crude oil. So I just wanted to show it without my indicators first, and I already have shown this in the past. So if we simply look at this in isolation, so there's the chart. So I was referring to lows that were set back in 2021, and then again in 2023, and then in 2024, and currently around now. We're basically trading around those same levels. So the price floor is somewhere between $60, roughly speaking, around $60. We've been kind of bouncing from that $60 to $70 area for many years, since obviously 2021. So 3, 4, 5 years already. And we're currently there. So we can look at this current situation. We're approaching this price floor levels. And I think if we get to those price floor levels and we break below, especially these levels from 2021, by extension 2023 lows, I think we can easily collapse all the way down to the low 40s for oil. How do I get that number? So you can kind of see that this is an inverted, they can call it inverted W. I mean, it's not really W, but it's an inverted sort of pyramid, maybe, like there's a pyramid, and then a multiple smaller tops. Maybe this is an inverted W. The opposite is true when we're seeing a breakout above. For example, this could be like a cup and handle. So we're literally just broke out above the lip of the cup or lip of the handle. Like this is a big cup. I'm going to draw it out like that. Okay, so I don't really look at those that often. This is a chart formation, but sometimes they jump out at you, and I think this is what's happening with oil, is that it sort of just jumps out at you. It's like upside down cup. So if we break below the levels I just said, around $60 or so, we can take our pick on how far down the price will travel. And I'm going to be very, very conservative. So I'm going to pick this little pick top. So this is about 20%, so about $15 or so. If we break below, the 2023 lows, then we could collapse all the way down to around $47. That's very, very easily. So it's an extremely conservative estimate of about $15 breakdown after the breakdown. But if we are a little bit more bold in our prediction, maybe we'll duplicate this on the downside, and this is about $28 to the downside. So how much is that? Where is that gonna end up? We can end up in the mid 30s for oil. Will that happen? Nobody really knows, but I think that this is a very reasonable estimate. If we break below the previous lows, especially 2023, maybe this 2021 low, I think the door is open to significantly more downside. Notice I didn't use my indicators, but we can. The indicators I used mostly for directional trading. So, for example, previous opportunities to trade oil. This is a weekly chart, remember. So there would be, I would have shorted it right there where I'm hovering on the week of Monday, the 27th of January, and I would have been very much correct. So that's oil. Let me know what you guys think. And here is the final topic for today, and that is for Bitcoin. Bitcoin is traded just like any other currency. This is a weekly chart, and you can clearly see how you want to be trading it. You want to be buying it on close above the blue support resistance line. And this occurred for the first time in a while. It occurred back in April of 2023. Before that, we were in a downtrend since 2022 January. Upward facing arrows indicate where I would be considering buying it, because we have moved above the blue line, came down towards it. We want to be buying there, basically. So same thing. We, for example, back in March 2024, we moved above the blue line, came down towards it. We would have bought it around there, and then made a new, and Bitcoin made a new record afterwards. So right now we're sort of in the same situation, but also not. So this is an all-time high for Bitcoin, and then we saw a breakdown below the blue line. So, sometimes small breakdown is okay. Like, for example, right there where I'm hovering in September of 2024, there was a small breakdown below this blue support resistance line. Next week, we saw a close above it. Everything is great. We bought it, and then we continued higher. We had a pretty largish breakdown here on the week of March 3rd. And then so far we had one attempt so far to kind of move above it. So actually last week, the week of, we can look at the weekly, daily time frame rather, so that it's a little bit more granular. So there's the attempt to move above the blue line, and then so far we have failed. But it's more obvious on the weekly time frame, because notice that we have really tried to move above this blue line, but so far have failed. So there could be resistance that is provided by this blue support resistance line at around 86,700 for Bitcoin. And if it holds, if this resistance holds, we could see something of this nature. So a move towards the red line, which is currently around 71,000, is entirely possible. So we're looking at like 17% drop just to start. And if we break below the red line, then we could be in an honest to goodness bear market, which could continue significantly lower. We just don't know how low it could go. But one step at a time. Let's see what happens in the next few days to the next few weeks. If we see a close above the blue line, then maybe we'll just relax and with this whole downward momentum. But if this resistance holds around 86,700, then we could see a move lower towards the $71,000 area. Let me know what you guys think. Other than that, when you're ready, head over to MasterChartsTrading.com, click on sign up with one of the products. So in the making right now. There will be another product here, hopefully very soon. We're working on it with my partner. So right now I have basically two products. I have trading indicators, so these lines on the chart. You can have them on your chart as well. You can trade pretty much anything on the sun on multiple time frames, for example, on daily, weekly, hourly, or a minute time frame. Newsletters, so I send out daily alerts about various securities that we trade. For example, this week we'll be covering all of these various securities, including currencies, ETFs, large cap stocks, speculative securities, as well as gold and silver related. And of course, we can also get both of them, the indicators and the newsletter. So all of those are available currently. The third product, well, because this is actually a bundle, so a third product could be coming sometime soon. A third product most likely will be stock ratings. So we will be looking at using my algorithm, using the algorithms that paint this green, blue, red, and yellow line. We will be looking at stocks, and we will be rating them as for example, buy, sell, hold. Basically, regular stock ratings as are available from other companies, but they're based on a different algorithm, and I think it's a better algorithm. So based on the lines that we're seeing on this chart. So hopefully that is coming relatively soon. We just need to get our algorithm to a point where it will be fully automated, and then we'll send out alerts once the subscribers sign up. All of the plans have a free 7-day trial. You can start and then try it out for a week, and if you don't like it, of course, cancel anytime. The best deal, of course, is to get both trading indicators and newsletters at a yearly subscription plan. They're currently at $599.95 per year, which comes out to about $49.95 per month equivalent for the indicators and newsletters. You can also get monthly plans as well, and they're all very affordable. You can get the indicators, newsletters, or both of them together. Right, let me know what you guys think in the comments. Make a comment, share this video, like this video. If you have any questions, ask a question. Other than that, thank you for watching and have another great trading week. Bye-bye.